I think there are quite a number of factors, but I think maybe we just touch upon the three most important, which I think most important. And number one, I think is valuation. Yeah, I mean, let's see, look at January this year when foreign investors became especially interested in the Japanese market. I mean, in January, Nikkei 225, the price to book was trading at 1.5 times, and topics, which have a broader measures, it measure about more than 2,000 stocks in Japan.
Welcome to Curious Investor, Saxo's regular video on investment markets. I'm Thomas. Today I'm with our strategist Redmond Wong at our Hong Kong office. So today the topics we're going to discuss how to transform currency risk into valuable assets to enhance our expected return on investing in Japanese equity markets. Hi, Raymond.
Yeah, we have Thomas. Really glad to be here to discuss with you about investing in Japanese equity market. It's really exciting recently. And then, of course, we need to look at the Japanese yen as well.
Yes, absolutely. Actually, if you have been looking at the markets, so the Japanese equity market has not been the focus for about 2 decades. And actually, since the Japanese bubble troubled since 1989. And what factors do you think that it contributing to shifting in focus into Japanese equity market these days?
I think there are quite a number of factors, but I think maybe we just touch upon the three most important, which I think most important. And number one, I think is valuation. Yeah, I mean, let's see, look at January this year when foreign investors became especially interested in the Japanese market. I mean, in January, Nikkei 225, the price to book was trading at 1.5 times, and topics, which have a broader measures, it measure about more than 2,000 stocks in Japan, and is trading at at the time was trading at 1.1 times price to book, and in fact, it's more around half of this 2,156 company within the topics index at that time were trading below book value. So I mean, it's quite inexpensive at that time. But of course, you and me has been trading and in the market for quite some years, and we know that if just being cheap or just being low, trading below book doesn't really mean that it's a good idea to buy those stocks. And you need those companies to give and to return the value to the investors and to enhance and to do something to help the stock price to go up, to realize to reflect the value of the business. So I think one good thing, I think also foreign investors noticed in January this year, Tokyo Stock Exchange has issued some documents, some meetings, and some policies, and they ask and those listed companies to improve corporate governance, including measure like for those companies with shares trading below book value, they ask them to have to unveil the issue some strategies, to say how to improve the valuation of the company. And so that is a very good development, because in the past, it means Japanese company can trade below book for many years and being cheap for many years and never really bounced. So foreign investors were very happy to see that, and also have been seeing that is some even domestic investors become more active in to go to the boardroom, so to push the management to be more proactive and to enhance the value of the company and then improve share price. So I think this is the second things, yeah. And the third thing is there's more about we have more talking about the geopolitics and the fragmentation game here in Saxo, and we say in this world, the global order become more fragmented. So company and country will move their production base to more economy-friendly countries. And Japan is ally of the US and also ally of the European Union and the UK. And also it has very strong production base and expresses the know-how. I mean, it's very good in material science, special material, chemicals, precision machinery, semiconductor equipment, you name it. I mean, a lot of critical technology, even though they are not making many of them at the moment, but they have the know-how, and but now they are making those things outside. But if they themselves and also a Taiwanese company, American company, European company, they move the production base to Japan. Japan have very good supply chain. Not only the large company, but also smaller, medium-sized company. Actually, they give the whole complete supply chain support this very high-tech manufacturing industry. So this is the third. So valuation, a more improved focus on shareholder value, and the reconfiguration of global supply chain. This three has been supporting the Japanese market, and foreign investors are aware and see that, and they come back.
Well, there's lots of information that you share with our investor. But this year, besides all these factors, when we mention about Japanese equity market, we cannot forget about the name, famous investor Warren Buffett.
Yeah.
So he has been investing into 5 trading companies, and has been visiting Japan as well. So what's your take on Warren Buffett?
That's good news to investors, because it's the endorsement from Mr. Buffett is always to boost the confidence. And actually, Mr. Buffett, the Berkshire Hathaway is invested in those 5 Japanese trading house back in early 2020, and they make the first disclosure in August 2020. And at that time, they own more than 5% already of those each of those 5 leading trading company. And then they increased the position in November last year. And then in April, as you said, and he made some public endorsement about those company, and also told investors that he was planning to do more in Japan. So yeah, I mean, that's very good news. Absolutely.
As a foreigner, we always worry about the Japanese yen, the currency risk. As we all know, the Japanese yen has been weakened against the US dollar for about 9% this year, and then about 11% against the euro. So what do you think about the Japanese yen risk against the Japanese investment portfolio?
Yeah, I think you are very correct to mention about the risks for any investor who are investing outside of their home country, investing in assets denominated in currencies other than their own base currency. And I think since we are actually talking about we want to invest in Japanese equity, so let's not speculate on the direction of the yen. And in fact, it's better for investors. More prudent is, I think, that the approach is really to hedge the currency risk. And the very good news is that for Japanese yen, if you hedge it, it doesn't really cost you money, but actually make you more money, because it's Japanese yen is a low yielding currency. So if a low yielding currency, as you know, it's the forward will be higher, more expensive. So if you buy, for investor, they buy the yen as the spot market, on the spot market, and then at the same time they sell the yen at the forward. And so let's say 12 months, they actually can pick up, depends on what currency they are trading against, depends on the base currency. And let's say Singaporean dollar, Hong Kong dollar, US dollar, Euro, Australian dollar, probably you can pick up between something like 3.8% to 5.8% over the next 12 months. So that's additional yield, and to add to your return of your Japanese stock investment. And so, yeah, I mean, that's really nice.
Yeah. We have learned that a few factors contributing to investing in the Japanese equity market, and plus a very good strategy in hedging the currency risk, plus an enhanced expected return for Japanese yen. So I think we conclude today's episode. Remember, like, investment is always incurred risk. So for more personalized investment strategy, please consult your investment consultants.
Yeah, that's for inspiration. It's not investment advice. So talk to your financial advisors, and also do your own research and before you make any investment. Thank you.
Okay, thank you. Stay tuned for more curious investor. Happy investing.